Hi everyone, so welcome to Investing for Value. Today I'm going to look at Carnival Corporation. While this company has really taken a massive hit, particularly now that the coronavirus has kind of spread a bit more worldwide, and a lot more people have been affected. And also I think it's going to affect cruise liners in a way that's a bit more significant than I initially thought it would. Initially I thought it would just get into Asia, so we can see right here on this map. Initially, I just thought, hey, it's going to be in Asia, but it might just be isolated around Asia, with most of the cases being there. But now that we look at things, and we're considering how is the coronavirus now? Because everyone talked about Carnival just having most of their revenue coming from around Europe and other parts of the world, but being very limited in Asia because their revenue was about 10% coming from Asia, but a more of a larger percentage coming from Europe. And at the time, the stock was above $40, and I was saying, if it got to 35 or lower, then maybe you can start being a bit more serious about the stock. I still stick with that view, though there's been a recent change where Italy has been hit. So like as you can see, like Italy, just a few days ago it was around like 200 and something cases. Now it's at 400 cases. So that's quite a rise, and it's kind of showing that things probably won't be slowing down around Italy. And if it potentially gets out to the wider Europe, then it's definitely not a good story. And it kind of halts a lot of cruise liners because when people go on a cruise liner, they're kind of really wanting to go around Europe. So that's a significant part of, say, like Carnival's business. So at $33, you must be considering, is this a buy, especially how much it's dropped. Looking at how much it's dropped, I mean, yeah, like you think that it's potentially an opportunity. I mean, if you're buying for the long run, you can buy a little bit because the dividend return is 5.5%, which is quite nice. As you can see here, they pay out $2 per year. Though it could drop you, but it's the risk you take when you buy at such a high dividend return at 5.5%. So one of my views, originally I told you to be a bit more serious when it gets below 35, and this was when it was above 40. Now that Italy's been affected, I'm going to have to do a slight adjustment. Like I would say, like you want to get more serious when it gets to $30. I'm going to move that 35 below to that 30 target. And I think you only want to buy at 33 if you really want to get in, you can buy a little bit, but I think it's got a bit more room to drop. And the company's only taken a forecast of the next 2 months. So when a company only considers the next 2 months, but this is going to last a lot longer than 2 months, and it's going to get more severe, particularly in Europe. Demand for cruises is going down. I do not see a case where people want to take cruises now, particularly now that Asia's been heavily hit. And then now, like, Middle East is hit, and then now you've got the crown jewel of cruises, which is Europe. The minute Europe becomes a place that people don't want to be around on a cruise, it's it's not a pretty picture. So I want to reconsider this, and I want to say, that you want to be a bit more serious once it gets below $30. Though I can see the stock potentially hitting 25 or even lower. So like you want to leave some cash on the side, especially in markets like this, and you want to be able to buy in if it ever drops to really big lows. Like never mind, like if say like they halt half their operation, how would you feel about holding this stock for if they halted half their operation? You'd really have to be a long-term investor. Um, I think the dividends are still going to be paid, but probably if operations have got halted by like a half, I can see like dividends will be lowered for sure. Like no point paying high dividends when you still have to pay your staff, when you still have other like expenses around your overheads for the large operation. So there's a lot of risk buying at a high share price. Like if you brought it to 40s, then yeah, like it's not ideal. But if you see, if you're willing to hold out for the next couple of years, then I think this is a company that slowly comes back. Though, you gotta give the market time. Like if you're taking cruises, you're probably not that keen to take a cruise for at least the next 6 months. For some people, probably the whole year. And then maybe next year, if things are really cleared out and they're safe, then maybe cruises start to recover. People would actually start wanting to take it. And, it becomes a slightly brighter situation. Though currently, like I think things are just starting now. Like we could, initially when it was just like centered around Asia, you kind of thought that things could just slow down, particularly when you've got about 30,000 recoveries, which is very good because considering there's no actual vaccine, a lot of people are getting better, though the cases are still rising. Particularly like you look at South Korea, yeah, that number has just exploded from like last week. Last week it was like a tenth of the size, and now it's gone up 10x. So it just shows that if it gets into a country, the numbers can just like skyrocket very easily. And that's the thing, like, and that's kind of the worry of Italy. Like, if Italy gets it, does it go to France? Does it go to Spain? Does it go like to a wider market? And that's and this area here, like this is the prime part about doing cruises. You want to do a cruise and sail around this area, but it's not good when like you've got Iran that's got quite a few cases now, 139 cases for that matter. And then if it spreads out to this wider area, then potentially you've got this whole area, which is usually quite prime, for like cruises. No one really wants to go in these areas because these are like important areas where you want to dock, you want to travel there, you want to see the sights. No one wants to be stuck on a cruise because if you've seen with the other cruises, potentially you might have people that get infected. You're stuck on that cruise liner, or you've got countries that actually just don't want to take on the cruise for fear that you might have someone on board who has the virus. So right now, I'd take a cautious approach, and I'd say like $33. Like if you really wanted to buy, only buy a very little bit because I don't see the price going up. That's the thing. Like your downside is much higher now in the current situation than your upside. So like if you had a low upside, then like it's not worth the little bit of upside. You're better off waiting for it to dip even lower, particularly that $30 mark, and then you take it a little bit serious. So the best way to put it is like this in reality is basically like a recession for cruises. So you wanted to consider it. This is a recession for cruises. Prices are going down, but long term, if you're willing to hold for long term, then it comes back up, and the value is going to be realized again. Though currently it's just a start. It's just a start, and you still will have a bit more downside as things go on. Firstly, cruises are having to lower their pricing to get more customers, and also they're going to have a lot of routes that they can't go into. So potentially that also reduces revenue. And the one thing that won't change is their overheads. They still have to keep paying money. So they're going to reduce revenues. Expenses don't change. The biggest hit likely in this situation will be profits. Because even if you do your current cruises, and it seems like they're doing them at big discounts, you've got extra compliance because all of a sudden you've got to provide all your customers with extra safety gear. You need more doctors on board because what if someone gets sick? Or a lot of people have been to different countries and maybe they might just have a cough or a flu or something like that, and your doctors have to be, fully staffed and on alert. They need to be right there, and you probably need more than the standard amount of doctors afterwards, or a larger medical team for that effect. So expenses are going to be slightly a bit higher in terms of your normal cruise. The pricing they're going to get is a bit lower because no one really wants to pay a premium these days to be trapped on a ship potentially. So that's kind of what I'm seeing with Carnival currently. And for the wider cruise market, like it could be like Royal Caribbean, or it could be other cruise liners. The current picture isn't looking that great yet. Like maybe if like Italy slows down in their cases, like currently 400, and it doesn't get around to other places. Though you can only see like in Germany there's only 19 confirmed cases, but 15 recovered, so like they're not too bad. France 18 confirmed, 11 recovered. So, like that's five existing. So, like it's not too bad. So, like numbers aren't too big in the rest of Europe. It's just Italy, is not necessarily in the best situation right now. So, in the scheme of things, it's always prudent to take a bit of a safe approach, and be able to buy at a lower price. So in this current market, basically, you want to hold a bit of cash. You look at one of the world's best investors, and that's Warren Buffett, and he's holding cash. So take a page from his book, and be smart about what prices you buy it. Don't get caught too quickly in like the dividends. You'll be like, oh, it's paying such a high dividend. The price is trading at such a low compared to like 1 year. 1 year ago, this used to be close to $60, but then it slowly dropped, and now it's just basically an all-time low. So when you consider whether you want to buy, you want to consider that you want to buy up a margin of safety with a bit of cash on the side to average down in case you need to. For me personally, I would probably need to see this at closer to the $25 mark just to see more upside in the short term, because I don't see much upside for the stock in the short term, or even like potentially this year. Though like it could be heavily hit by the middle of the year, and it could have a little rally by the end of the year. So we don't know how things are going to pan out. All news, like at the end of the day, the biggest influencing factor is the coronavirus. If the coronavirus starts to spread less, and the recovery cases go up a lot more, and they're able to contain everything, then yeah, maybe things do look a little bit brighter. But until now, I think it's good to just take a cautious approach. Hope that helped in a certain way, or just at least it was an update on my original video, rather than everyone just watching the original video and then sticking with that advice. So the updated advice is buy a little bit or get more serious below $30. And for me personally, I think I find it more interesting around $25. And I think, yeah, like you'd have to have a very long-term goal of holding throughout all these, very volatile period in that sense. Until then, if you've got any questions, let me know, or any companies you want me to look at. For now, well, I'll just leave you there, and good luck investing, everyone.